Right now, while you're watching this video, your money is losing value sitting in a savings account, earning 0.38% interest. Meanwhile, people building serious wealth are earning 16% annually using one simple strategy that takes 5 minutes to set up. I'm about to show you exactly what they're doing. But first, if you're under 45 and tired of watching your money shrink while inflation eats it alive, this video could change everything. The strategy I'm sharing today isn't some get-rich-quick scheme. It's the same approach that turned a $10,000 investment into $67,000 over the last 5 years, while your savings account would have earned you $190. But here's the thing, most people under 45 are making 3 critical mistakes that keep them broke. I'll reveal all 3 and show you the exact fix. Hit that like button right now if you're ready to stop being financially average. And subscribe because I'm dropping wealth-building strategies like this every week. Let's dive in. Here's what banks don't want you to know. While they're paying you 0.5% interest, inflation just hit 2.7% in June 2025. That means you're losing 2.2% of your buying power every single year your money sits in savings. Let me show you what this actually costs you. If you have $10,000 in savings today, in 10 years, it will only buy you what $8,000 buys today. Your safe savings account just cost you $2,000 in purchasing power. But here's the part that will shock you. While you're losing money to inflation, banks are lending your deposits out at 7 to 18% interest rates and keeping the difference. You're literally paying them to make you poor. Meanwhile, wealthy people under 45 are playing a completely different game. According to Federal Reserve data, high net worth individuals allocate 47% of their wealth to public equities, while the bottom 50% of Americans keep most of their money in cash and savings. The result? The top 1% now controls 30.9% of America's wealth, and it's growing faster every year because they understand compound growth. Here's the math that changed everything. A $500 monthly investment in the S&P 500 starting at age 25 becomes $2.4 million by retirement. Start at 30, you get $1.6 million. Wait until 35, just $1.1 million. Same monthly investment, but waiting 10 years costs you $800,000. The wealthy don't wait. They start now. Drop a comment right now. What's your current age and how much are you investing monthly? I'll personally respond to show you your potential retirement number. Here's the moment that separates wealth builders from everyone else. They realized every month you delay investing costs. You compound growth you can never recover. The wealthy under 45 aren't picking individual stocks or trying to time the market. They're buying simple index funds like VOO, VTI, or SPY and letting time do the work. Here's your wake-up call. If you're 30 and invest $500 monthly starting today, you'll have $1.6 million by retirement. Wait 1 more year, you lose $50,000. Wait 5 years, you lose $250,000. Time is literally money, and you're burning it every day you wait. Here's what I want you to do right now. Pause this video, open your banking app, and look at your savings balance. Then ask yourself, how much of that could be earning 10% instead of 0.5%? If this is hitting you hard, smash that like button and share this with someone who's still letting their money die in savings. Meet Josh and Mia. Let me show you 2 people who prove everything I just said, and one decision that created a $758,000 difference. Meet Josh and Mia, both 32, both earning $65,000, both started with $5,000 in 2018. Josh did what 90% of Americans do. Stay safe, just save. He put $200 monthly into a high-yield savings account, earning 1.2%. Mia did what wealthy people do. She put that same $200 monthly into VOO, a simple S&P 500 index fund. After 6 years, Josh, $19,000, but inflation made it worth only $16,200 in buying power. Mia, $28,900 and growing. But here's the real shock. If they continue this exact same strategy for 25 more years until retirement, Josh will have $89,000. Mia will have $847,000. Same income, same monthly amount, $758,000 difference. The wealthy aren't smarter. They just choose compound growth over compound loss. Comment below right now. Are you currently a Josh or a Mia? I want to help you switch sides if needed, and if you're realizing you've been a Josh, hit subscribe because I'm about to show you the exact investment vehicles Mia used. Investment vehicles the wealthy use. Here's what sets this channel apart from every other so-called finance guru. I'm not giving you some overly complicated 47-step system. Wealthy individuals under 45 typically use just 4 simple investment vehicles. And the best part? They're accessible to everyone. No insider connections, no huge account minimums, no advanced financial tricks. According to Federal Reserve data, high net worth individuals under 45 allocate their money into exactly these vehicles. And I'm about to show you what they're buying. If that Josh vs. Mia comparison opened your eyes, let's dive into the top 4 investment vehicles that could transform your financial future. Investment vehicle number 1, index funds, the lazy millionaire's secret. Warren Buffett's $1 million bet winner. Here's what shocked Wall Street. Buffett bet $1 million that a basic S&P 500 index fund would outperform hedge fund managers over 10 years. He crushed them. For under $400, VOO gives you instant ownership in Apple, Microsoft, Amazon, and 497 other companies. The millionaire math. Invest $200 per month in VOO starting at age 25 equals $1.37 million by retirement. Keep it in savings instead, you'll have just $84,000. The top picks among the wealthy: VOO, ultra-low fees, 0.03%, SPY, most liquid, FXAIX, ideal for 401k accounts. Comment below, which one are you buying this week? Investment vehicle number 2, dividend ETFs. Get paid while you sleep. SCHD has paid dividends every quarter for 12 straight years, even during the COVID market crash. Real example. $10,000 invested in HD 5 years ago equals $16,800 in value today. $2,100 earned in dividends. Your savings account, maybe $500 total. Top dividend picks of the wealthy. SCHD, 3.5% dividend yield. VIG, 25-year track record. DVY, monthly income. Set dividends to auto-reinvest and let compounding do its thing. Investment vehicle number 3, REITs, real estate without the headaches. Own a slice of Manhattan real estate for just $100. REITs, real estate investment trusts, are legally required to pay 90% of profits to shareholders. While your landlord collects rent, you collect dividends. Example, VNQ returned 9.2% annually over 20 years. That's real estate level gains without dealing with tenants, repairs, or massive down payments. Wealth builders go for VNQ, broad real estate exposure. O, monthly dividends for 29 years. PLD, owns Amazon's warehouses. Stop watching others get rich from real estate. Join them. Investment vehicle number 4, target date funds, ultimate autopilot. Just choose your retirement year, invest monthly, and you're done. These funds automatically adjust from aggressive to conservative as you age. Example, $300 per month in VFFVX 2055 fund equals $1.2 million by retirement. Set it once, forget it. Retire comfortably. Top choices: VFFVX, Vanguard 2055, FDEEX, Fidelity 2055. Drop your retirement year in the comments. I'll tell you which fund to choose. How to start the 5-minute millionaire setup. Here's how to go from zero to invested in just 5 minutes. Step 1. Choose your platform. Fidelity, great for beginners. Vanguard, the king of index funds. Schwab, known for excellent support. Step 2. Open a Roth IRA. If you're eligible, this is the best first step. It offers tax-free growth forever. Step 3. Link your bank and automate. Start with as little as $50 a month. Automate contributions so you don't have to think about it. Step 4. Make your first investment. Not sure where to begin? Start with VOO. Feeling confident? Try the 60-20-20 rule. 60% VOO, 20% SCHD, and 20% VNQ. Step 5. Reinvest and forget. Set dividends to auto-reinvest. Check in once per year. Wealthy people aren't smarter. They just start. Every month you delay costs, you compound growth you'll never get back. Common objections and why they don't hold up. 1. I don't have enough money. Thanks to fractional investing, you can buy $5 worth of Amazon or VOO. It's not about the amount, it's about building the habit. Start with $10 a week and scale up as you earn more. Most wealthy investors started small. 2. The market is too risky. What's truly risky? Losing 2.7% to inflation every year in a savings account. Historically, the S&P 500 has never lost money over any 20-year period. Time reduces risk, and you have decades on your side. 3. I don't understand investing. You don't need to understand engines to drive a car. Investing can be just as simple. Buy VOO. Automate $100 a month. Check once a year. The wealthy aren't stock experts. They're automation experts. 4. I have debt. Pay off high-interest credit cards first. But if your debt, like student loans, is under 5%, you can invest and pay debt at the same time. Even investing $25 a month into VOO puts you ahead of most. Waiting costs you more than you think. Starting today versus next year, that's $50,000 less at retirement. Final thoughts. Every day you keep your money in a savings account earning 0.5% while inflation runs at 2.7%. You're choosing to lose money. Wealthy people under 45 aren't smarter or luckier. They're simply consistent. Their simple blueprint: 60% in low-cost index funds like VOO, 20% in dividend ETFs like SCHD, 20% in REITs like VNQ, automated monthly investing, tax-advantaged accounts like Roth IRAs. That's it. No day trading, no crypto gambling, no get-rich-quick schemes. The real difference? It's not intelligence, it's action. If you're under 45, your most powerful asset is time. And every month you wait, compound growth slips away. The real question isn't whether you can afford to invest. It's whether you can afford not to. What to do next? Simplified. Pick one platform: Fidelity, Vanguard, or Schwab. Open one account, a Roth IRA or brokerage. Buy one fund, VOO, SCHD, or VNQ. Start with what you can. Even $25 a month makes a difference. Automate and check yearly. Don't just watch. Start. Action, not intention, builds wealth. Your future self is depending on the decision you make right.